The third quarter of 2020, we thought of it as digital gold, and I would say we were technocrats. My view was this is the dominant digital monetary network in the world. It's like the Apple computer or the Facebook of money or the Google of money. And it's going to be a 10x or 20x investment return. But then by the fourth quarter of 2020, after I'd studied even more and I'd met all the Bitcoiners in the community and I'd studied the words of Jack Dorsey, and he very famously said this to me and it stuck with me forever. He said, Bitcoin is an instrument of economic empowerment. And then I thought about what that meant and I realized that this is actually property rights and freedom for 8 billion people. And that makes it ethically better than Apple or better than Google. It makes it better than Microsoft and Facebook and Netflix and any great technology idea. So I went from being a technocrat to being a maximalist. I think technocrats think it's the dominant digital monetary network in the world. The maximalists think it's an instrument of economic empowerment for 8 billion people, which makes it even better and makes it an ethical, moral imperative. Well, I think the best strategy is just Bitcoin cost averaging. Just when you have free cash flows, if you said, I'm going to buy Bitcoin over the course of a decade, and every month or every quarter you say, what kind of free cash flow do I have that I want to save for more than 10 years? And you sweep that into Bitcoin. Think of it as a long-term savings account. If you need money for the next 12 weeks, you probably want the money in the local currency. And if you need money over the next 12 to 24 months, you probably want the money in like the dollar or the world reserve currency. But if you don't need the money in the next 2 to 3 years, it's really a long-term savings. At that point, probably your best bet is just sweeping into Bitcoin. And don't measure yourself on a 12-month time horizon. Look over the course of, say, 4 years. I think the 4-year simple moving average is a useful metric to look at. If you consider, you're buying Bitcoin at a ratio of the 4-year simple moving average, and if you look at your results over 4 years, then I think that's kind of helpful. When people look at 4 months and 4 weeks, I think they tend to get pretty frenetic and it induces anxiety. And on the margin, there's almost nobody that can make money with a 4-week or a 4-month time horizon because you're a trader at that point. And you saw in my presentation today, I showed that 99.5% of the days of the year, nothing's happening. And so the odds are stacked against you if you're attempting to time the market. I think the lesson of the bear market is if you're going to be in the Bitcoin business, you have to have a long time horizon, and you need to always look out 10 years, and you need to expect volatility will come from market to market, and make sure that you're positioned to weather the volatility. Right? People that were overly levered in the bear market all went bankrupt, and those that actually manage to manage their finances more responsibly get through it, and they benefit when the bull market comes again. I think that if we take today in particular, there's a panic sale of all the crypto tokens, and most of them are crashing 15, 20, 25, 30%. Bitcoin is the best performing asset. So when people have other tokens, sometimes, and they have Bitcoin, they will sell their Bitcoin to support their other token. For example, when Terra Luna crashed, Do Kwon owned a bunch of Bitcoin, and Do Kwon sold the Bitcoin to try to support the Terra and the Luna. When Three Arrows crashed, they had a bunch of Bitcoin, they sold the Bitcoin to try to protect their business. When Alameda crashed, they sold the Bitcoin to try to prop up the FTT token. When FTX crashed, etc. When Celsius and BlockFi were crashing, people were selling the Bitcoin they had. So when the altcoins crash, there's a near-term panic transaction where people panic sell Bitcoin to raise liquidity to try to protect their business from going bankrupt or unwinding. At some point, they either stop because they realize it's not going to work. You can't save FTT. You can't save Terra Luna. They weren't savable. But both of those companies sold billions. I think between the two of them, they sold $5 to $10 billion worth of Bitcoin at panic sale prices. So the crypto ecosystem in a risk-off trade will contract and they'll sell Bitcoin. But then at some point, all the altcoins will go to zero. And then people will realize Bitcoin is the only asset worth holding over the long term. And then you see the reversal of that, and there's a surge of energy into Bitcoin. So in the near term, the rationalization of the market isn't really good for anybody if you're measuring your performance in days or weeks. But if you're measuring the performance over years and decades, then it's completely healthy. And what's really happening is every single person in the crypto industry today, they like Bitcoin, and they also might have liked an altcoin. And they woke up and they realized that, in fact, Bitcoin is better than they thought it was, and the things they didn't appreciate about Bitcoin, like the fact that it's indestructible and nation-state censor-resistant, and it's got incredible base of support, they realized that's actually more useful than they thought it was. And then they realized that maybe there's a lot more risk in the other thing that they were holding, and maybe their other token wasn't as good an idea as they thought it was. And so what you'll see is all the crypto people will start to shift their allocation from the altcoins back to Bitcoin. If you thought your altcoin was going to the moon, Tether is indestructible, and Binance is a perfect network, then you would say, oh, Bitcoin is boomer coin. But if you actually think, well, maybe stable coins won't be around, and maybe all the crypto exchanges aren't as secure as we thought, and maybe my altcoin's not going to the moon, you think actually Bitcoin looks like the safe haven, risk-off reserve asset and the safest network, and it's the one that isn't going to get attacked. And so I think this is an educational event. And the first people to get educated will be the crypto bros, all the crypto traders and all the crypto token investors. And they're going to migrate a lot of their capital and a lot of their development energy and a lot of their focus to Bitcoin. And then the next layer or the next wave will be the mainstream investors. And they will look and say, okay, the market's rationalizing around Bitcoin. And so now that the market's cleaning itself up, it's safe for us to come in and buy Bitcoin. But they'll wait until all the dust settles. And that'll be the second wave, the second leg of the bull run. I think that those banks are decreasing the amount of liquidity in the crypto market in general. Generally, the liquidity in the Bitcoin market or in the crypto market has been a negative for Bitcoin. Most of the companies providing liquidity, FTX, Celsius, Genesis, BlockFi, Voyager, Three Arrows, Alameda, they were actually shorting Bitcoin. They're actually selling the Bitcoin or rehypothecating Bitcoin in order to keep the price down. And so as those companies go bankrupt and they wind down their business, then there are fewer and fewer ways to short Bitcoin in a naked fashion, or there are fewer ways to manipulate the Bitcoin price. And so as that happens, then the balance of power will shift from the traders and the bears and the crypto tokens back toward the Bitcoin holders and the long-term Bitcoin investors. And that lays a very strong foundation for the bull market to run. So I'm not bothered by banks cutting off on-ramps or off-ramps to the crypto industry.